Netflix drops earnings after the bell, and no, subscriber numbers won't be in the script anymore. The hot scenes to watch out for? Netflix's operating margin forecast, currently 29%. Will advertisers keep tuning in as the ad tier ramps up? And can management tease out new growth from live sports and big-name content deals? And with that key stat, subscriber growth, left on the cutting room floor, engagement could steal the spotlight, especially with a killer second-half lineup. Squid Game, Stranger Things, Wednesday, Knives Out, Taylor v. Serrano 3, and even NFL. And keep track of price hikes. Will they be padding the bottom line all year long? Stay tuned, because we've got more with Bloomberg's Ryan Vlastelica, because this earnings episode might just be binge-worthy. Puns aside, Ryan, what's Wall Street saying?
Hey, Ed, thanks for having me on. So everyone is pretty optimistic about Netflix's position right now. They continue to benefit from a lot of very strong secular trends, not just the shift towards streaming, but also their ability to continue growing ad revenue on their platform, their continued embrace of live events like sports as a way to further juice the sort of ad part of the business. The only question is all this expected? Is all this priced into the stock? And are expectations too high, given the stock has been one of the real standout performers of the year?
Right. Year to date, the stock up 41% so far in 2025. Netflix has been saying for quite a long time, we want you to judge us by normal financial metrics that all other industries and companies are judged by. I said we won't get that subscriber count or subscriber growth. So from a top or bottom line perspective, what is it that we look to with Netflix?
I think anything they say about their outlook from here, what they're going to be spending on content, their continued ability to sort of improve efficiency and kind of improve their cash flow, their earnings, all that is going to be taking the place of subscriber numbers, especially since, at least here in the States, pretty well saturated. They're pretty well positioned across the globe. So I think that might be of less interest to people right now. But certainly, you mentioned all the content they have coming out. People are very interested to see, are some of the gains that we've been seeing already this year, is that likely to continue? Or are they due for some kind of consolidation here? On a separate note, I'd also be very interested on anything they say about competition from sort of newer entrants, things like YouTube and TikTok, or those areas where, you know, Netflix maybe faces some competition as like new places that people are going to view content.
I pay for the non-ad tier. I've just completed Squid Game Season 3. I'm watching The Sandman. That's a bit of a miss with me. But if I were to pay for a tier where ads were involved, what are we learning about advertising and Netflix's platform? Because this is an industry-wide thing right now.
Yeah, we are seeing more companies start to explore these kinds of options. Obviously, Netflix has a huge subscriber base here in the States. You know, hundreds of millions of people use it. I think they even started automatically putting some people on the ad tier, because if people are watching it enough, you're actually making more money with the ad revenue from those viewers than you would be getting if they were paying up for the higher tier that doesn't include advertising.